For years, you've had these two financial worlds kind of living side by side, one built on centuries of tradition, the other on brand new code. Well, today we're talking about the moment that all changes, when they finally start to merge in a really significant way.
So on one hand, you've got Wall Street, right? The bedrock of global finance. And then there's crypto, the wild digital upstart. And for the longest time, man, those two did not mix. Wall Street was pretty skeptical, and the crypto world was, well, proudly independent. But that wall between them, it's coming down in a big way. And it's because one of the biggest names in old school finance is actually building a bridge that could completely change how both of these worlds operate. And that giant, the one building the bridge, yep, it's JPMorgan Chase. And they've just announced something that's, well, it's a huge step into the world of digital assets. So what exactly is this big move all about? So what's the big news? Well, a recent Bloomberg report dropped the bombshell. JPMorgan is planning to let its big institutional clients use Bitcoin and Ether as collateral for loans. And get this isn't some 5 years from now kind of thing. Nope, they're trying to get this launched by the end of this year. It's happening fast. Okay, so why is this such a big deal? Well, think about it. It lets these huge investors unlock the value of their crypto without having to sell it. But, it also brings up a pretty massive question. How on earth do you actually do that safely?
I mean, really, how does something as volatile as Bitcoin become the security for a traditional loan from a bank like JPMorgan? Let's dig into how it works. It actually boils down to a pretty straightforward 3-step process. First, the client, one of these big institutions, pledges their crypto. Now, that second step is absolutely crucial. Here's the key. JPMorgan isn't holding the crypto themselves. Instead, they use a specialized third-party custodian, a company whose whole job is to keep these digital assets safe. And this is so important, right? For security, for regulations. It just separates the risk and puts it in the hands of experts. And once everything's locked up and secure, boom, JPMorgan issues the loan.
And hey, just so we're all on the same page, what even is collateral? It's just something of value you put up to guarantee you'll pay back a loan. Think about a mortgage on a house, right? The house is the collateral. If you stop paying, the bank gets the house. It's the exact same idea here, but instead of a house, we're talking about Bitcoin and Ether. But here's the thing. This move by JPMorgan, it isn't happening in a bubble. Not at all. It's actually a really important piece of a much bigger shift that's happening across the entire financial world. I mean, the change in attitude has been just night and day. It wasn't that long ago that if you mentioned crypto on Wall Street, you'd probably get laughed out of the room. It was just a digital fad, right? And now, it's being baked into core financial services. They've gone from stay away from that stuff to a full-on embrace. And believe me, JPMorgan is not alone in this. This is a huge trend. You've got other giants. We're talking Morgan Stanley, State Street, Fidelity. They are all diving deeper into crypto, offering everything from ways for regular folks to buy in to these complex custody solutions. Okay, so this begs the question, right? Why now? What is going on that's making all of these financial giants jump in all at once? Well, a huge part of the answer is right here, this number. That price tag on Bitcoin, that represents a staggering amount of value. We're talking serious money. And when an asset gets that valuable, the big players who hold it, they don't just want financial services for it, they need them. So you can really boil it down to two main things driving this whole shift. First, you've got pure market demand. These clients are sitting on a mountain of valuable assets and they want to do something with it. And second, the rules of the game are changing. The regulatory hurdles that used to keep banks on the sidelines, well, they're starting to get a little bit lower. All right, so let's zoom out. What does all of this mean for the future of money? Because this is way bigger than just some new kind of loan. What we're seeing is a fundamental mashup of two worlds that used to be totally separate. The source itself puts it perfectly. It calls this a rapidly growing integration into Wall Street's core lending infrastructure. And that phrase, core infrastructure, that's everything. This isn't some side hustle or a little experiment. This is becoming part of the actual plumbing of the financial system. So yeah, it's pretty clear that what JPMorgan is doing here and what the others are doing too, it's not just adding a new item to the menu. It's a foundational change. We're literally watching that thick, solid line between traditional finance and digital finance just dissolve.
the two worlds are starting to look a lot like one.
And that leaves us with one last big question to chew on. For so long, we've called crypto alternative finance. But, think about it. If the biggest banks on the planet are weaving it into their most basic services, can we really call it alternative anymore? Or are we just watching the beginning of, finance?